So, you guys, this is our next article. Then actually, I know they're unrelated, but related somewhat, and I'll get to why I say that.
Yeah.
Because also in from HousingWire, we have homebuyer assistance programs rose to nearly 2,300 in 2023. 3 in 4 available homeownership programs were tied to down payment and closing cost assistance.
Yes.
I want to say right at the top of this section of the show that the increase of programs was actually 804 new programs that are designed to assist with the purchase of a manufactured home. And that takes us up to 2,300 total available programs. So the article is a little bit, could use a little massaging.
Yeah, there you go.
But I thought it was very interesting that the, I'm sorry, I already said that wrong. I'm sorry, you guys. Let me go back and say this. A total of 135 new homebuyer assistance programs were introduced in 2023. The 804 I keep talking about, that is for manufactured homes. So
yeah, I was kind of like,
I'm sorry.
That is skewed there.
I want to make sure it's okay. It's all right. Let's make sure that's clear at the top.
Thanks, Andy.
So we're finally at this number where we have 2,300 available programs, but 75% of them, 74 specifically, are down payment and closing cost assistance.
That's crazy.
So is that even prevalent right now for us in San Diego? Is that working here in San Diego? Where do you see it working? Why isn't it working? Why should it be working and it isn't? Give me the goods.
Well, we already know CalFHA already has that, right?
Yes.
And they only provide you with a certain amount of funds that are available.
Well, yeah, it's a bucket, and when the money's gone, the money's gone.
And it's gone quick.
Yes, sir.
And they have participation on your equity if you sell at a later time.
Yeah.
You know?
And then this time around, they're actually making it even more difficult. You have a voucher, you have a time period, and you have to use it if not, basically. And it's a round robin. You don't just get it. You have to send your application and be chosen.
Yeah.
So it's a little
so
bit more.
There's different ways how to do that. But here's the thing. Here's a challenging thing in San Diego. I'm not saying that because you're going with down payment assistance, that's gonna, your offer won't get accepted. What's happening is when you're putting a down payment assistance, purchase agreement versus a conventional or something that's going to close quicker, the other type of financing options have the tendency of closing faster.
That's true.
Okay?
Yes.
With down payment assistance, you have to get everything fully underwritten, clear to close. Then you send it to the next stage for the other underwriter, where CalFHA, they underwrite that and say, yep, you're good to go.
Right.
Okay? That could take 45 days.
Right.
And people are like,
so
wait a minute.
You're outside a normal time frame of 21 days or 30 days.
Exactly. So all those have tendencies to kind of get in the way and skew the way a first-time home buyer is going to look at the property.
So you think you think is the timing the biggest issue, or is the timing the perception that if I have buyer A who doesn't need this and buyer B who does, buyer A might be more strong? Is that part of it too?
Well, if you're put in the seller seat and you look at you're comparing, right? You're probably going to go with take the path of less resistance. Mm-hmm. Who's going to close faster? Who's going to give me the proof that's already done?
Yeah,
it could be done faster. And I just think that if I'm representing the seller, I'm gonna coach them that this is about probably the best option if you want to get to that next stage of where you're looking to be at. Because remember, all these times make a difference for some people. Some people already have to be in their certain destination if they have work orders, or they have to close at a certain time because they have another home that they have to purchase. So in real estate, everything's about time.
So what is your professional advice to someone who is maybe looking at down payment assistance and knowing that there's these potential issues or things that can prevent them from getting their offer accepted? What would you tell them? What do you say to people?
It's very difficult because obviously it's very challenging in our end. But I would tell somebody like this, just like, hey, maybe we're gonna have to just take a look at a property that's been maybe sitting in the market a little longer.
Oh, that's a good point. Okay. That's a good solution.
Because
they've already been waiting.
The seller's already waiting, so we already see that they don't have to be somewhere that quick. So maybe we could put them in there. And let's put an offer on that. So I don't know, little things like that could make a difference.
Okay.
Because what we don't want to do is discourage somebody either.
Yeah, and
of course not.
They already took the time to get approved for a down payment assistance program. Like, how do we help them out?
Well, that's what I'm saying. There's a fine line between not being honest and being discouraging, but it's sometimes the honesty is just discouraging. Yeah. So sometimes it just is that. It's not about whether you're going to tell the truth or not. It's like, hey, the reality is this. You might not like that. Yeah. But that's the way it might be perceived.
Well, it was like the first wave, right? When the CalFHA came out last year with it. And they allotted, what was it, like 500
So 350 million, and then
to
it went
500
down
million,
250.
then went down to 400, and then
it
it's
was
like we
done.
didn't know. But those funds were gone within 30 days or less. It was done.
Yeah.
Like it was done. Like
Which demonstrates the need for it, though. Like it kind of like proves the point. Oh, we need all this money to do this for people because of this and that and the other thing. Well, yeah, that kind of proves the point. If that money evaporates like that fast, that proves a point. And I remember last year we talked about it in the spring, I think in 23. I was saying watch for creativity in the market when things are tight like this. People start getting creative. It's local agencies, it's municipalities, and then even in this article, you see a growing number of non-bank mortgage lenders recently rolled out down payment assistance programs to increase their origination share in challenging mortgage environments. Other lenders that have introduced DPA programs or down payment assistance oriented programs: Rocket Mortgage, United Wholesale Mortgage, Guild Mortgage, Guaranteed Rate. Like these are household name kind of mortgage companies.
Yeah.
Yeah, like you got your UWM, right? It's 1% down. You know, but
Right. The point is that they're doing it.
There's a county loan limit. There's a limit, not a county loan, but there's a limit to that.
Yeah.
Right? Which I believe is 350 where
That's not anywhere around
we're
here.
We're going to get here in San Diego.
Yeah, but other parts of the country that might be like very lucrative for someone to
Absolutely.
take advantage of that. Number one. Number two, I think it proves the point that the agencies, or even in this case banks, non-banks, they're going to get involved, because if you see that creativity is required to get even more market share and to get a larger database of clients and make more money, you're going to start doing stuff like this. Otherwise, you're going to find yourself on the outside looking in while your competitors do stuff like this.
And I think these things are great. It just helps people, inspire and encourage them that, hey, you know what, there's hope. Well, how do I get to this? And how do I do that? I mean, obviously they launch these programs because they're going to work.
Well, a couple weeks ago, Brian and I were talking about how there's some school districts that are actually participating in housing now too, because the amount of allocation they have from tax funds to pay teachers for public school is inadequate for the teachers to actually live in the place where they're being asked to come teach. And so one of the things is like, well, the school district's like, well, we need to buy this place or rehab that place and provide housing for teachers and educators, because our allocation of tax funds to pay them already absorbs everything we have to pay them with, but that pay isn't still enough. We can't give them more money that we don't have.
Wow.
So the way to offset that was for them to come up with some creative housing solutions and provide housing for teachers.
Not bad.
I think for like the younger generation and people that I spoke to that, you know, are interested in down payment assistance, I think one word comes to mind, Will.
What's that?
Leverage.
Yeah.
And the reason I say that is because it goes back to the points that we made earlier about the buying habits of younger generations. I feel that if a younger, buyer's like, hey, we can give you 20% down and you can keep your $40K that you have in the bank, but you could use ours, the younger generation is going to be like, heck yeah, I'll take the $100K. And I feel it's a program for people that do need it, and it does work when you need it. But I have had clients that make well over 6 figures, and programs have now increased as well the income limits for these programs.
Income
and
limits,
I have clients that are like, yeah, great credit score, great profile, but they're still like, hey, if the assistance is there for first time per program, I want to have it and I want to use it.
Yeah.
And they're like, oh well, I do tell them it's gonna take longer. Some of them are like, all right, that's fine.
Yeah.
So I think it really just goes on case by case. If you don't need it, don't get it. Because it does come with stipulations down the line. Like we have a client right now selling a house. He thought he was gonna, be free and clear and not have to pay that debt that he had for the down payment assistance. Turns out he has to go fork out the $22K that he got, but he didn't know that. So
but here's the thing.
And he didn't need it.
But here's the thing. You're kind of saying, in other words, you're saying, well, I've waited all this time and I've waited all this long. Why not? Might as well try it.
Absolutely.
Just like you're saying, hey, you got DPA. Go to a seller that's been sitting on the market. That seller, maybe they're on the market for 3 months, 4 months. Well, might as well take a look at that offer. I've been waiting all this time. So maybe there is a little marriage here in my hypothetical scenario on the show. But if you got buyers feeling that way, sellers feeling that way, maybe that's a match. I don't know.
I mean, it happens. The reason why they make these products because people do accept them.
Because they need it, and
Some people do need them, and they do help some people.
Absolutely, it helps. It's leverage at its best. If you can borrow money and no out of pocket cost, that's not a problem. I mean, we have a VA like that. It's almost like down payment assistance. Just doesn't require a down payment. Right?
That's right.
The only difference is
you put your time in for it.
The only difference is you can close those things within 10 to 21 days versus the other options.
Yeah. Well, and the leverage point is key in this part too, guys, because I did not know until preparing for the show today that 686 of these programs are available for the purchase of a multifamily property.
Correct.
I did not know that. Every time I hear down payment assistance, I always think, oh yeah, that's for primary residence, well, primary, but
It
also
is.
your own personal and only one. I was not aware that there were so many programs available for multifamily, which is great because then there's leverage and there's the investment opportunity possibility with that too. So that was a nice surprise for me to learn that in the prep for this.
Well,
and
here's the other thing on the multi. Back in November 19th, I think they passed that new rule with Fannie and Freddie, 5% down. That
Right.
was
Multifamily.
something we just never seen that.
Right.
And I know you've been talking about it, like the government or banking systems, they're going to become creative. We
Yeah.
already see Rocket, we already saw Rocket, Gale Mortgage, United Wholesale,
Guaranteed
UWM,
rate.
Guaranteed
Yeah,
Rate.
big hitters.
They're doing it. Well, you
Yeah.
see how even the school districts already thinking like, hey, how do
Yeah.
we help our teachers?
So
Yeah,
you got
it's-
banks, municipalities, you got school districts, you got all sorts of solutions coming to play.
Correct.
To try to give people housing that's affordable.
Let the people do what the people do.
Well, yeah,
Capitalism.
That's true, but also there's still creativity required.
Yeah. No, totally.
This is evidence of that. I think our last two articles, I think, are evidence of that. Obviously, at the legislative level, there have to be some solutions for bringing back some affordable housing.
Yeah.
Part of that's market function, part of that's builders and legislation, and then I think the down payment assistance. Again, I think that's part buyers and sellers.
Yeah.
Like, hey, we want this, and this is useful for us.
Yeah, the beauty of all of this is that at least we live in a state where we try to bring options.
Yeah.
I was listening to this other podcast in Canada. Their 30-year is a 10-year.
Yes. Oh, yeah. That's the one you
Right.
shared. That's right.
And so they have adjustable rate mortgages, and their current rate right now at a 10% rate is like a little over 8%
No, a
currently.
10%, a 10-year loan.
Yeah, 10-year
10-year
loan is like
rates.
8%,
Yeah.
correct.
Yes.
The 10-year, and then the 3-year is like at a 7.5% adjustable rate mortgage. So every 3 years they're refinancing over here. So we're a country that has a mortgage for 30 years.
Yeah.
And they're trying to bring, FHA to a 40-year. Imagine that.
Yeah. Yeah.
Because there's only a way to make it affordable, even though we look at it like, oh my God, 30
40
years is going to take
years.
me forever.
Yeah.
But no one
it's
ever
going to
stays
be
in the house.
leverage, is what it is. You know, it's what
One
it is.
word.
It's totally
Some people
changed.
have 10. Yeah, one word. Some people,
One
10
word.
years are like, you know what that payment looks like at 8% right now? My goodness.
That's
Yeah.
what I was like. Yes.
No, thank you.
Yeah.
I'll take none.
No,
Well,
no,
it's still is it, well, I thought I heard him say it was still amortized over 30, but it's a fixed for 10.
You know
right?
what? That's what I didn't know.
I think it was
Thank you,
fixed.
that thing,
No,
I missed
it
that
was,
part.
It's adjustable by nature. It's basically a 10-1 arm. Think of like
Okay,
a 10-1
got
arm.
it, okay.
So it's fixed for 10 years and it was adjustable
Got
after
it.
that. So here's the deal though. Let's say you get to the 10th year and the market's lower than 8. Fine, let
Yeah.
it adjust downward.
Yeah, but
That's
what
gonna work
about
for you, too.
you have a great rate at 2.7 for 30 years?
Well, but they don't have that. It's 8. You said so.
Exactly. But what I'm saying is, here with us,
Yes,
right?
I know. I
Yeah,
know.
30 year, like, that's great.
It's the golden handcuffs he talked about, show after show
Yeah.
after show.
GC.
People are locked into their low rate and they love it. So, and I love it for people too.
Yeah,
But
thanks for clarifying that.
It has created some new problems. So,